Hey, what is going on, everybody? Welcome to another episode of the Rapid Review. Appreciate everybody live over on YouTube, over on X. Good morning, Brian. Yes, absolutely. We'll definitely go over those names. Actually, AMD and BE are on my list as well of names I wanted to review. So, good call on those. So, if you are watching, chat's open. Say what's up. There are some stocks that you would like to look at in there. Any questions? If you disagree with something I say, just let me know. I'm always up for a good debate. And other than that, we're going to be doing what we usually do, breaking down the overall market, looking at some leading themes, industry groups, stocks, and prepping ourselves for what is another week of trading. So, morning, Chad. Morning, Chad. Appreciate everybody. Without further ado, it's time for the rapid review. All right. So, as always, that you guys know, disclaimer, not financial investment or trading advice, informational and educational purposes only. Oh, what's going on? Hi from Germany. Always cool coming from the US and seeing you guys from different countries watching. So I appreciate that. Thank you. All right. Market direction. We are in an uptrend, still in a macro uptrend. But again, we kind of talked about it last week. That choppiness started to kind of return. And for sure, this was a choppy week. So macro uptrend, micro choppy. Yes, Osprey, we are definitely looking at BE. Brian wants to, I want to, you want to, everybody wants to look at that one. So we'll make sure we do a nice little detailed analysis of that. In terms of distribution days, the S&P has 5, the NASDAQ has 5. So what went on this week? Here you have your distribution day tracker. On Tuesday, we dropped 2 distribution days. We dropped 1 on the S&P, 1 on the NASDAQ, and that was the 12/12 distribution day due to time. And then, sorry, let me see. Tuesday, we added a distribution day in the S&P. And then on the NASDAQ, we dropped 1 and added 1. The NASDAQ dropped the 12/11 distribution day due to time, but both added 1, which is where you see this distribution day added on the 20th on both indexes. For the Wednesday was both indexes dropping the 12/12 distribution day due to time. And then that's what kind of led us to what is now 5 and 5 on both indexes. I always put this disclaimer out. I might differ a little bit from IBD. Sometimes it has to do with, most of the time, it has to do with how the volume is shown on the indexes. Every single platform calculates it and shows it slightly differently, and that could sometimes alter what distribution days are counted and not counted. But in general, I think this gives us a good picture, and this is just one of the things I look at for the overall market direction. Going into next week, though, the 12/17 distribution day up here is going to drop on Monday due to time. You can see we're currently sitting at 24 days. 25 days will drop it off. But then after that, that's pretty much it. We have a while, another whole week before we drop anything else off due to time, as you can see with these days here. And then in terms of price movement, we need a decent price movement to get these to drop off. It can happen, but not likely. So if we don't add anything next week, we'll likely be ending off talking on here about 4 and 4. If we add more, obviously, we'll see what happens. All right, current state of the market. So this week, the S&P down 0.35%, NASDAQ down 0.06%, and the Dow down 0.53%. So relatively flat week when we look at just how we finished out the week. However, when we bring up the charts, you'll see it did not feel like a flat week. There was a lot of chop, a lot of movement, and we'll get into all of that. For the year, though, the S&P down up 1.02% in third place. The NASDAQ second place, 1.12%, and the Dow still leading out the year up 2.15%. All right, so looking here, current state of the market, and again, this is giving us a little bit of a picture of what's going on, but when we look at the charts, we'll see that choppiness that kind of went on during the week. We're finishing out the week. The NASDAQ did find a way to close above all moving averages, so we are above 10, 2150, and the 200. but the S&P did not. The S&P closed just off of that 10, but still above the 21 and the 50. And the Dow, same thing, just off the 10, above the 21, the 50. The Russell still showing strong above all three. I'll actually bring the Russell up too, and also the mid caps up, just so we can kind of take a look at that, because there's definitely been some divergence in what we've seen with the mid caps and the small caps compared to just the overall indexes. So with that being said, let's jump over and take a look. Hold on. Got logged out. Give me a second. Let's get us logged in here. Hope everybody's Saturdays are going well as we're logging in. I don't know where everybody's from. I know everybody's from kind of all over the place, but we got a pretty crazy storm coming in. So hopefully everybody's all prepared for this storm. All right. I don't know if you guys have experiencing this, but yesterday I had the same thing happen. Thinkorswim, TD Ameritrade was just not really doing well. I don't know what their deal is technically. Let me see. What we're going to try to do is we're going to sub this. This is what we're going to do. We're going to sub this up for our backup platform. Let's switch over now. All right, there we go. All right, so let's make a couple adjustments. Let's show this to get those moving averages up. All right, cool. We're up and running. All right. So looking at the moving averages, like I said, we were able to start the week off, or we ended off last week where we were just above the 21 day. And then this is where that extreme volatility kind of picked up. We saw Monday, the U.S. markets being closed, just the U.S. markets because of Martin Luther King Day. And then Tuesday, the open was this big gap down right here. Right through the 21, right through the 50. And then throughout the day, we just saw a ton of selling coming into market, closing near those lows, closing well off the 50. So definitely a rough start to the week after that holiday. And then Wednesday, we did have a strong day, right? We can see this right here. We were up. We started up, continued up. But then intraday, we saw some real resistance at the 21, and then eventually saw the resistance at the 50 as we were not able to close above it. We closed both below those two indexes, and the volume was definitely lighter. So that was a big concern for me. Between these 2 days, number one, the gap down, didn't like seeing that. And then number two was just seeing that we had that resistance at the 21 and couldn't close above the 50 after that rebound. Yeah, definitely. At this point was where I kind of was like, okay, I'm starting to decrease my exposure levels. I was starting to lighten up, and it was mostly due to the action of holding below the 50 and then seeing those resistance levels right there. The positive was that we did hold below the low of Tuesday. And then going into Thursday and Friday, we saw a nice strong move on Thursday as we gapped up above the 50 and above the 21. And then we tried to get above the 10 where we were kind of rejected. We tried to get below the 21. We were rejected, and it ultimately closed pretty much right at the open on Thursday. And then on Friday, finishing out the week, very, very similar action. We tried to move to the upside. We tried to move to the downside. Ultimately, we did make it back above that 10-day simple moving average, but still a relatively flat day. And that's what's interesting about this week, right? We had those relatively flat days here. We had the relatively flat week as we saw before, and you can also see that here when we just click here. But we definitely had a lot of volatility as we started off really rough, and then we kind of rebounded and had some rejection over here. So it was just kind of chopping around what has really truly been a range-bound market. Since really October, that's where just kind of the volatility really picked up. We had this pullback right here, then the extreme rally up, and then since we kind of peaked over here, we've just kind of been caught in this range-bound area from the highs of October 29th to really the lows of November 21st. And like we had been talking about these past couple of weeks, things were looking to improve as we saw really what was a VCP pattern starting to form. As you can see, we had the big pullback, rally, smaller pullback, rally, smaller pullback. And then we were working our way towards what would have been basically a VCP breakout on the indexes. But ultimately, things kind of got a little bit choppy last week and then really choppy this week as we saw a lot of resistance at that level. And that was really where things for me kind of started to change because this was looking really beautiful, right? And in the beginning of the year started out really strong. Things looked really positive. And then last week and this week, it just started to get really sloppy, really choppy. Some names still working, but not all of them. And we're just, again, seeing just this volatility pick up in the market. What I will say is, technically, depending on how you look at it, in the very micro, in the short term, we did create a lower low. If you were looking at what I was looking at as this like third dip in the VCP pattern as a prior low on the January 2nd low, we did break below that, and we did spend time below the 50, which is not good. But in terms of just looking at the overall trend, you could see that we're still above this 1217 low, which is good. So maybe this was just some chop in the kind of make your way up to this pivot, and then now this is another higher low. So it's debatable whether we're creating lower lows, higher lows, how you want to talk about it. But regardless, I think the big thing to talk about is how we went from what was a less volatile, tightening up market, looking like it was primed for a nice coiled up move to the upside, and then it kind of just got sloppy and choppy, and now we're still just spending time in this range bound area. And for us trend followers, that's just not what we're looking for. We want a easier uptrend, sustained market with less chop. So that this environment is not ideal. But what I will say, especially when we start looking at, we'll talk about just some kind of these key upside levels. We kind of could easily, if we get above, there's a bunch of areas right here, right? We have the December 10th high. You can also look, you have the 5th high, this kind of area right here. You have the December 22nd right here. You have these high right here on the January 13th. Just this whole kind of region and area right here. Clearly seeing resistance here. If we could break through this area, I think that we could possibly have a nice real sustained uptrend. That's really going to be great. Or if we start making lower lows, I'd expect that we continue to maybe trend downwards. And either trend is kind of welcomed into my eyes, either trending upwards or trending downwards. It's this choppiness that gets a little funky because that's where you can see that death by 1,000 cuts. That's where you're kind of hesitant because things do look good some days and you don't want to be left out, but then things look horrible other days and you're getting chopped up. And we'll talk a little bit about exposure levels and how I approach markets like this to make sure that I'm not completely eliminating myself from an early move on the next uptrend while still protecting myself on the downside. On the downside, when we're talking about that in terms of key levels, the 50 SMA is definitely something I'm keeping an eye on. I mean, we haven't respected it entirely, but it's still a key level that most people are going to be looking at in terms of the trend. So we do want to see us continue to stay above that and hopefully find support. And then the big real low for me right now is going to be first, Monday's low. Second, looking at the December 17th low. Those three key areas are really where I'm keeping it on the downside. And then the upside, it's really right around this range on all those different highs. And then from there, if we do make it above, then it's really just this, it's just this October 29th high. All right, cool. Osprey, gap above the 23,800 zone, bulls back on. Yep, I definitely say like right around that range, right? We're kind of clearing all these highs, all these resistant levels. That's going to make me feel better. And the one other thing while we're talking about this that I look for, it's not necessarily that we just break that level, because like you could see on January 12th, we did break that level. And we did it on higher volume as well. It's seeing that follow through action, seeing that confirmation that we're trending the same. If I'm really summarizing a lot about how I look at the markets, it's very similar to how I look at a stock. Where are my resistance levels? Where are my support levels? and where's the trend and the moving averages. And if I do see that break, the same with a stock, just because a stock breaks a pivot point, we want to see that confirmation. We want to see that follow through. We want to see that volume come in, and we want to see the explosive move from that level. And that's, ideally what I would like to see moving forward. Again, market doesn't always give us what we want. We could chop, we could go uptrend, we can go downtrend, and we could do a bunch of stuff in between. The main goal of what we're doing is just understand the environment that we're in, understanding different areas and metrics, not metrics, but key points to look at that'll kind of tell us where maybe we should start switching how we're operating in the market. So choppy environment right now, we kind of know we're looking the upside, we know we're looking the downside, and we'll kind of operate as the market gives us more data. All right. And we really saw the weekly, but there you have the weekly. And for the week, the Nasdaq did close in the 84.22% range, so it did close in the upper side and did close above that 10-week, which is positive. All right. Let's S&P, to be honest, not too much more to say about this. Pretty much identical action. The only difference is we're having this happening, and I said this last week too, and actually a couple of weeks. This is just happening more towards all-time highs, so not much different there. Dow, you can see also very, very similar, happened to all-time highs. A little bit less sloppy than the Nasdaq, a little more uniformed of an uptrend right here. So this looking much, much better. But yeah, this Dow definitely is a strong performer. The Russell, right? So the Russell really just kind of performed great this year to start off the year. If you look, right, we had the first trading day of the year, and we've essentially just traded and trended upward. We found support on Friday at the 10-day simple moving average, but this has just been a really strong uptrend. Those small caps have definitely been performing very, very well. And then I don't have it up here, but let's do the mid caps. And mid caps very much similar, not as strong as the Russell and the small caps, but very, very similar action. As we've kind of broke through this range, we pulled back and squatted and then continued higher. And we're kind of right now just below the 10, but still trending upwards. So yeah, just seeing some of the divergence between the small caps, the mid caps, and then just the overall indexes. But still overall, the market environment's definitely choppy. All right. Van Pro, what's going on? Shout out everybody from Discord. Appreciate you guys. All right, so let's talk industry groups. We're going to jump over to Deepvue. And let's take a look first, as I always like to, at the theme tracker. Looking at the theme tracker, as I posted on X, hi ho, miners continue to rip higher. They just can't be stopped. Silver miners, gold miners, rare earth and mineral miners, and even to some extent, we're seeing those Bitcoin miners, which obviously that's a very different thing. But it's just miners in general. You use the term miners, and everything looks pretty good, and everything's doing well. You can see this week they were the top performers. You can see on the 1 month time frame they're up there. On the 3 month time frame they're up there, and year to date, miners. Again, I know Bitcoin miners, gold and silver miners, totally different, but just miners, man. Other than that, things to kind of note: solar. I've been talking about this multiple weeks in a row. Solar looked like it was getting really primed up for a nice move. It had been showing some relative strength. We're starting to see that carry over. Here's the 1 week. Here's the 1 month. We're starting to pull up. You can see the 3 month time frame looking good and year-to-date time frame looking good. So really liking that solar. The names have been acting a little choppy, but overall there is relative strength in the solar space. Biotech is another group that we've been talking about that we continue to see strength in. Where we got biotechs there. Biotech lagging a little bit, excuse me, in the 1 month. And then here, 3 months looking good. But yeah, biotech, another group. Oil and gas, seeing that showing a lot of strength. And like I said, Bitcoin miners really coiled up. When I look at the ETF tracker, we'll see the kind of chart on that, how it looks like it's really coiled up to move. And I apologize for my dog Kona going off right now, barking his head off. But yeah, the big thing in general is we're definitely seeing like energy, whether it's traditional forms of energy, oil, gas, And then you have those alternatives, solar, uranium, hydrogen starting to peak up. So let's jump over to my theme tracker. Excuse me. All right. We'll take a quick look at just the weekly. Reset this. So the way this is a list of ETFs that I built for myself. I have my daily charts here, my weekly charts here. I dropped my list in here. I have, thanks to Deepvue, which if you guys don't know, this is the tool that I use for all of my screening, charting, everything. The tool is absolutely amazing. If you're interested in checking it out, I have a link in the YouTube description, and on X, I have a link in my bio, and you can check that out. I honestly think, especially for the price, it's probably the best tool out there. But let's go 1 week RS, which is comparing itself to the S&P's performance. Like we said, we see those miners, so I'm not going to click on theirs. Here's those rare earths, also really trending well. But then you see uranium, and this kind of draws my attention, right? Uranium showing strength on the 1 week time frame. We can see even on the 1 month RS is strong, 3 month RS is strong, 6 month, like just RS across the board, very, very strong. But we're coming out of what looks like this big consolidation pattern. You can see it right here. It was a deep correction, but I look at the ETF slightly differently than I look at stocks. So we're back above those moving averages. We're trending higher, and we're working our way towards an all-time high move. Likely, if you look at a lot of uranium stocks, we'll hopefully see some of these patterns on here as well. And this is definitely an industry group that I am watching because I'm seeing that energy sector really performing well, and uranium definitely looking like it is joining that trend and possibly setting up as well as solar, right? Solar looks, we just had a breakout this week from the ETF on solar. You can see we've been in a sustained uptrend. I've actually been watching this as it was just starting that stage 2 uptrend, and now it's clearly in that stage 2 uptrend. It based out, and now it's starting to continue. We had a really strong move on the weekly with a lot of volume coming into this group. So solar really, really high on the watch list for me. But here, clean tech, same thing like you see with that hydrogen. We're coming out of hopefully consolidation pattern. Hydrogen, looking like it's now kind of trending upwards. You're seeing those moving averages now all getting above the 10, the 5, the 10, the 21, the 50, all trending upwards, 200 trending upwards, and working our way up the right-hand side of this consolidation pattern. So that looks good. Lithium has just been ripping a very, very nice clean uptrend, riding the 50 more, but a couple shakeouts below 21. That looks really good as well. And then oil has been trending really well. So that's what we've seen for the week. Let's look, the 1 month, very, very similar, but just looking at the 3 month, right? So looking at this time period where we started to really see the chop, again, the silver and gold miners, copper miners, rare earth minerals, like that's the leading group right now. No questions about it. And then following it up after that, we're seeing a lot of the energy. We're also seeing steel, which makes sense with seeing the Dow performing well. Aerospace and defense showing a lot of strength, and some of those space names also falling into that category, I think. Cannabis was showing a lot of strength on the 3 month time frame. It has kind of just got really just sold off, and now it looks like it's probably tightening up, but something to watch, but not something I'm looking to play on right now. And then semis. So this is one of those groups that's it's interesting because when you look at this group, it's a big group, right? There is a lot of names that fall into this group, and we're seeing that some of them are in basing patterns. A few of them have just broke out and ripped. Needless to say, the big thing here is semiconductors are trending upwards, and they continue to trend upwards. And because it's a bigger group, I think you just have to really look and find the leaders in that group, and find, if you are going to play this industry, make sure that you're entering at a place that makes sense, that you can assess your risk. Just because the group is doing well, you don't want to just buy something as it's extended. You're just adding extra risk into the buy, and more likelihood that you're going to get stopped out. Other than that, the Dow stuff, manufacturing, materials, things like that. China has definitely shown a little bit of strength too. A lot of those China stocks. And here we go. This is what I want to talk about. Bitcoin mining, right? So big move last year. A lot of strength, basically from when the market corrected and then kind of continued higher. Bitcoin was ripping, everything was ripping. We saw a ton of sell off, but now we're starting to see this pattern forming up. We really were coiling up right around, and a lot of the Bitcoin miner names looked like a very similar pattern. And then we've seen some of this little, like these last couple of days, the volatility did start to increase, but we are seeing that we're finding support on downside areas that we should. Hut, which is a name that I do own, looking very similar action to this. So looking like it is tightening up and prime. We're not tightening up, but primed for a nice move upward on the right-hand side of this consolidation and hopefully make its way towards all-time highs. If you are playing around these names, I noticed that a lot of these are higher ATR, a little more volatile names. So just keep that in mind. And don't feel like you need to chase. Like we might, and very likely, as a lot of these names get towards those all-time high levels, we'll likely see some tightness. We'll hopefully see some tightness form up where you can assess your risk and find an entry. The big thing, just don't chase, especially in a choppy market like this. The last thing you want to do is chase and then see something open up the day down 9-10%, and you're just instantly stopped out because you bought in kind of no man's land. And then biotech, again, trending upwards. Quantum is the last name that I'll go over. Overall, this trend looks good, right? It looks like we've kind of like broke out of this range. We're trending higher. We're near all-time highs. Some of these names don't look as good. This group does tend to move in general as a whole. It's a group I'm paying attention to, but just pay attention to what the stocks are actually doing. Some of them look good, some of them don't, and just focus on the ones that are looking and showing the most strength. All right, let's now we talk about exposure levels. So we did discuss, right, what's going on. We're in this choppy market. And like I had mentioned before, I think a question a lot of people have is, all right, we're in this choppy market, especially when we're so close to some areas where we could expect to see a big uptrend move breaking out of those kind of consolidation in this range bound area. Like, how do you prepare yourself to be in a position that if we do trend up higher, you're not just getting caught flat-footed, the market runs on without you, these stocks run on without you, and you don't find a way to get in. But then how do you also protect yourself from the chop and from the downside? For me, it is one, limiting my exposure. If I'm not 100% invested, I can basically watch things fluctuate a little bit more, and it's not having a detrimental impact to my portfolio, where if I'm getting stopped out of everything, it's a huge equity impact. Trading in smaller position size so that when things do start to get a little bit of legs and do make room, if they give areas of additional add-ons, I can increase my exposure in those names that way. If they don't, at least I do have exposure in those names. And even if it's not the biggest position, it allows me to participate somewhat while still protecting myself on the downside because I don't have as much equity at risk. I tend to try to look for more tighter entries and use those tighter entries as a way to manage my risk and try to de-risk things as quickly as possible so that if things start to make moves, I can de-risk a little bit, allow a little more fluctuation in the price to keep myself in these names without getting chopped up as much. And then what will naturally happen, which seems to be happening in this market, is you're going to have some names that you're just getting stopped out of that are chopping around, that are kicking you out and moving on without you. But then some of those names might trend upwards and it'll keep you in there. And you're kind of putting yourself in a position where you can manage the ability to be in if it goes higher and out if it goes lower and not get killed in the chop. So a lot of this just comes down to managing risk. Everybody does managing risk differently. Depends on your appetite for risk. Depends on your time frame, how you like to trade, all sorts of things. But that's just a general idea of how I look at everything. Markets like this, I'm reducing my exposure, reducing my equity risk while still dabbling in some of these names. So if we do get that trend higher, I'm in it. If we break lower, I'm out of it. If we get chopped up, I'm just limiting the amount of buying and the frequency of my trading. So I'm not just getting that death by 1,000 cuts. If the market does turn around and we do get a sustained uptrend, there will be plenty of buying opportunities. There are going to be names that are going to go on without you, but that's fine. That's part of the market. You're not going to catch every single name, and you only need to catch a few real good ones to make a really, really great year. So in terms of the exposure levels I'm looking at right now, I'm floating between that 40 and 80%. I think I'm right now, if I remember correctly now off the top of my head, I don't have it in front of me. I think I'm like 63% exposed. And most of those trades are pretty much de-risked at this point. So that puts me in a position where if things do downtrend, I'm not really damaging myself. I've locked in some profits. If we chop around, I may get kicked out, but I can kind of float around that flat area. And if we do trend higher, then I'm going to be in those names that I want to be, hopefully, and they make moves higher. So that's kind of how I'm balancing everything. Just remember, it's not about one single trade. This is a long-term success thing. Even if you mishandle this market, it's just about managing risk so that when the market is easier, you can make money in that market and you've preserved your mental capital and your actual monetary capital. So keep that in mind. You don't have to be participating in every market. And sometimes sitting on your hands is a little bit better for the long-term move and consistently growing your portfolio, compounding those gains, doing what we're all trying to do, grow our portfolios. All right. Now, let's jump back over to Deepvue. All right. Well, there you guys can see these are the positions that I currently own. SanDisk, which this was one of those really, really nice, clean setups, right? Just this clean cup, really, really nice handle with volatility decreasing right into that 21. We saw this big move on high volume, and that's where I got in. And now this has been a fairly easy hold. I took some profits just to on the way up, just to lock some things in. And now with the remaining core position that I have, we're just riding the 5-day simple moving average. And my plan is to essentially ride the 5-day simple moving average with another piece of that. And then if we break that, sell again. And then depending on where we are with these moving averages, I'll look at how my plan is if I'm going to trail a 10 or the 21, depending on how deep that move is. And again, that's just how I am. Some people will take this and they'll trail a 50. Right. And they're comfortable with this returning basically to a round tripping. That's just not my style. So, and we do have earnings come up on that. HUT, this is what I was talking about with those Bitcoins. This was something somebody asked me about. That's why that's on there, that I had sent to somebody where one of my add-on points was, as it kind of broke to all-time highs. But yeah, this right now, really, I'm just trailing the 21 on this, and it seems to be doing a good job of keeping itself above 21. And then healthcare. Healthcare has definitely been showing some strength. Trying not to sneeze. And I took a real low risk entry on this name right here. That's been on my watch list for a while. And just this kind of support here. It looked like a high volume move. Really tight risk. So that's where I'm kind of sitting at right now with my portfolio. This has to get updated. This is my last week's spot list. When I do my full routine, I'll go through this, but let's look at BE. This is a name that a lot of people are keeping an eye on. This was a massive winner coming from the market correction. Obviously, I know most people didn't buy at the bottom, but from that's almost an 800% move last year. Really a name that's been on a lot of people's radar. And then now we've got this correction. This has corrected pretty deep, 48.2, around 48, 49% of a correction. We saw two moves, right? So the one to the bottom looked like we rallied, bottomed again. We tightened up. And I know some swing traders that probably got in on the second and may have seen a pretty good move. But this did move pretty quickly. This was a 13.58% move. It moved too quick for me. I decided to just let it go because of trying to manage my risk on a high ATR stock. And really what is nice about this right now, and we don't always get what we want, but what I like to see right now is as we're approaching those all-time highs right here, we're kind of not really pulling back just yet, but we're kind of stalling. And what I would like to see ideally is to see a shakeout, to see us kind of pull back, maybe find support at the 21, have a low volume pullback, shake some of the weak hands out, and then create a really, really nice coupled handle. That's ideal. Market doesn't always give us what we want. Or even if we could chop sideways and just pull that 21 in a little bit closer. Right now, it's a little over 10%, maybe a little over 11% from that 21. So if maybe this goes sideways a little bit more, lets that 21 kind of catch up, that can be another area to kind of put your stop on. Main goal on a name like this is I just want somewhere where I could really, truly assess my risk. So if we go sideways, we may create like a kind of low. Maybe it was Friday being the low, and we could shoot against that. But that's the big thing with this name. Can we shake out some names, whether it's due to a pullback or whether it's due to some flatness for time where people just get tired of this and just start selling? And then if we can use that to kind of assess risk, that would be ideal. But overall, look, I mean, this is a name that I think a lot of us are watching, and it clearly was a big leader last year, and maybe it will return, maybe it won't. This is one that I'm keeping an eye on. And like I said, we're right around those all-time highs, and I'm just looking for a way for the chart to give me a setup that's going to let me assess my risk. Osprey, BE highlighted an IBD New America article. If anyone wants to deep dive into the story. Yeah, those articles are great, those New America articles, especially if you're somebody that really likes the fundamentals and wants to understand what these companies are doing. On Deepvue, you kind of give a little hover. It gives you an idea. So a manufacturer sells and installs solid oxide fuel systems, power generation, United States. This is playing a lot into the AI play of we got to supply AI somehow, and then that alternative energy type of play as well. So, where am I? AMD. That's another name we want to look at. AMD. Very, very similar, right? This was a name that in really had that crazy explosive move in October, like just ridiculous 23% move on that one day, trended up higher. I mean, from down here, we went from the bottom to the top. We had that real nice 60% move. And it had also corrected a lot. Actually, not too, but didn't correct too bad, about 20% with this point right here. But it had been trending up, and we now kind of broke out of this bigger long-term correction with that big gap up. And now it's almost like we broke out of this big giant pattern, squatted, pulled back. And now this is what I love about this chart, right? You can see we created this pattern. We had a couple of nice like shakeouts at the bottom. And then now it's just been off to the races. 1, 2, 3, 4, 5, 6, 7, 8, 9 up days in a row, all on good, high, above average volume. The way I have my volume set up, it highlights that. And when I see this going up the right side, exactly what I want to see. Similar to BE though, hard to assess your risk in this one. So ideally what I would like to see, and it looks like we got it a little bit on Friday, is to see some resistance right at that all-time high. Let these moving averages catch up, possibly create somewhat of a handle, and then give us the opportunity to really assess our risk. I know for some position traders, they don't care. They just want that breakout, and they're willing to buy that breakout. Especially in some markets, I will be willing to buy just a traditional base breakout and just put a generic risk stop of how much I'm willing to risk on that. And if I get stopped out, I get stopped out. But given this market, I'm trying more to have tighter stops and realistic places to set my stop to help with the choppiness that we're getting. Though this name has not really chopped up at all in the last couple of weeks. But let's see. Brian, AMD is forming a cup. Either it forms a handle next week, continues higher, or hey, it could form the cup. It has formed the cup. It could break out of the cup. It could form a handle, or this could just completely roll over and just continue on a downtrend, or this could shop around nice and sloppy and make this not a nice clean setup. Based on what we're seeing right now, I think you're probably what you're looking at, Brian, is more likely what we're going to see happen. But regardless, it's still about being disciplined and playing these setups within your strategy. But still, this is a name that I am definitely keeping an eye on. Oh, MP. I actually have that on here too. I just realized. And you have NP. And that's the only 3 I had. All right. So, fundamentals on this name aren't anything to write home about, right? But this is that metals and mining, and this group is doing well. And for me, at least, I like to see one of two things. I either want to be in a leading industry and leading group, and I'd be a little more lax on the fundamentals, or I want exceptional fundamentals. This falls into the category of leading group. And this, we've seen the base form. We saw some volume start to come in. We see ourselves getting up above all those moving averages, starting to trend upwards, taking out these attempts before, like these kind of highs, flat area on the bottom of the base. And now, if you actually look, looks like these highs are starting to become an area of possible support, which is good. This is one that I have been very tempted to take a position on and just kind of use what is this kind of sideways, because even if you look at this high right here, use this sideways flat bottoming area as if we re-enter that, I'm out. But if we could stay above that, I'm in type of area. And if you look at, if you just do that and the 10, you're looking at about a 5% risk. So I do like this setup a lot. I understand it is for some people a little bit extended, but if we can remain above this kind of bottoming, kind of consolidation flat area where we spend some time chopping sideways, now we've got above it. We seem to be finding a reverse of what was resistance to support and using that reverse of resistance to support area as a place to kind of put a stop. And if we can even tighten up a little bit more, maybe get a couple inside days, that would be even better, just to assess some risk in this. So I definitely like this name because of the group that it's in, the pattern starting to kind of perk up for us. And that's what I say. What I see for MP, this is Brian. What I see in MP is the average converging and tightening. I think this is a high tight flag. Personally, for me, a high tight flag, I need to see a big move. Most of the time, it's out of to a break of all time highs, and then a pause, and then a kind of tightening up above that area. I'm trying to think of a name that. I think this one, Reddit might have had, I think it was a failed one on Reddit, but let me just double check if I have a good example. Like this would be a little bit more of what I would consider a high, and then like a flag right here, more of a high tie flag where we kind of made this big break. It's a clear skyward movement with tons of volume, and then a pause, and then a creation of a low, and then, you know, in terms of like a flag, maybe, oops. We're looking at like, you know, some of these days here where we're seeing some resistance and kind of flag there. You know, that's a little bit, it's not the best example, but just in terms of just seeing this big run up, then the consolidation after that big run up. And for a high tie flag, I personally really define it more as like close to that 100% movement, at least a 50% movement for me to consider it in that category. That's just me personally. All right. Let's go through. We got a lot of names in here, so let's try to get through some of these. I'm going to go in order. So, Brian, I know you're up with NVT. Yeah, I mean, this just overall, you're right. You can see we had the big uptrend. You can see this pattern starting to form. Fundamentals, mediocre. Electrical components and equipments. We're seeing the fund ownership, the absolute strength, which this is instead of comparing to the S&P, comparing to all other stocks in the database. Not the greatest here. Low ATR stock, great ROE. But this pattern does look good, right? We do have this Basically, cup, maybe possibly starting to form a low volume pullback to create that handle, right? Those all-time highs here. Yeah, overall, this setup looks like something I'd be interested in terms of the chart, 100%. The question I always tell everybody is just ask yourself, is this number one, fall within the type of stocks I look to trade? Is this also, for me, a leading group, or are the fundamentals great? And if it falls into that category, then the last question I'm asking myself is this the cream of the crop that I want to be in? Or am I just taking trades because the setup's there? I want to be in what I think is possibly the leaders, or the best setups, or the most exceptional fundamentals. So just ask yourself, if this falls into that category, then take the trade. Not financial or investment advice. Carvana looks great on the daily and the weekly for Antone. There we go, Carvana. All right. So we'll start with the weekly. So we can definitely see this pattern forming here in the weekly. Lackluster volume coming up on the right-hand side, but needless to say, we still have this, consolidation pattern. And that's one of the things I do too, people sometimes I think get very, very caught up in the actual patterns itself. And, this is a double bottom. This is a flat base. This is a cup with handle. This is a double, at the end of the day, we're just looking at this consolidation, and then inside the consolidation, trying to understand the characteristics that we're building. This could be a potential VCP, small little VCP. You got a big pullback here to the 50. Found support at the 50, which is really, really positive. Climbed up, met resistance, pulled back, climbed up again. Looked like we tried to break out on Friday, and then maybe we'll get another smaller, tighter pullback. Finding support at least at the 21, hopefully, and creating that VCP pattern where if it does break out of that all-time highs, we kind of have that small daily tight VCP pattern. So definitely a name to watch. The fundamentals are pretty good on this one overall. Definitely got some good institutional sponsorship. ATR is very, very nice, reasonable, good ROE, strong absolute strength on the 90 and the 3-month. Not that great on the 1-month, which is what it is. That's not too concerning. But overall, seeing that 3-month and 12-month is bigger for me. And then even if you're just someone who wants to look quickly at the Deepvue ratings, I mean, we're above 85 on everything, above 90 on most, above 95 on most. So, and right at those all-time highs. So this is definitely a name I would keep an eye on. And looking at the weekly, this is something else too. You see, right, where we broke out of that. We're looking at things on multiple time frames. We broke out of that big correction, right? Basically had the IPO run up, this big correction, just like ridiculous correction. It's made its way back. It paused, and now we're starting to tighten up right around those all-time highs for the stock. It broke out and then kind of squatted. And that squat is where we're getting this little mini VCP. So seeing those different patterns and different time frames and how they kind of interact also gives me a little bit more of a context of the setup and makes me more interested in this. So I definitely think this is a name to be watching for sure. So that's a good call on that Carvana, Anton. Osprey agrees. Breaking out 4-year base. Oh, there you go. Osprey talking about that 4-year base. So you saw it before I did. Carvana late stage base. So okay, Vanpro. Here's a good thing. This is good seeing people's different views on this, right? Vanpro saying, okay, Carvana late stage base for me, 4th base, no reset on the right side. So seeing this, right? Seeing this from the bottom, this is a late stage base. And I could understand that too, right? Like this has just been a long run up. But seeing this on the weekly too, and seeing how he acted and tightened and everything, this just helps me to, even though it is technically late stage in the bigger uptrend, for me at least, seeing us right at those all-time highs, breaking out, no overhead resistance anymore. That's what the big thing is of breaking out on this giant multi-year base, is now there's just no more overhead resistance. If somebody owns this name, they're in the green. And that's good for, eliminating that selling pressure. Where in here, you got all these people possibly creating some selling pressure. Anybody that's held through this and bared the crazy, ridiculous correction that was eyeballing it, almost 100% correction, which people do it. I couldn't. Anybody, the selling pressure that you have coming out of this for people that rode this to the bottom is just a lot, even for over those years, though you will wash people out just a ton too. So a lot of ways to look at it. I understand both perspectives, but still, regardless, in my view, I think Carvana is definitely a name to pay attention to. We talked about BE. We talked about AMD. Anton also has LAR. All right. Right off the bat, tough, right? We're on the weekly. We're extended. But again, coming into this, big basing pattern where we've now started to make our way towards those all-time highs, and we've created this area right here. I don't even know what the depth is. Oh, this pullback to the 10, still a little deep pullback to the 10, but I can see what you're looking at, Anton, 100%. We got this giant multi-year base right at those all-time highs. We've kind of paused and squatted. I personally this is just not enough consolidation for me. So to me, it's still a little extended. I would prefer to see this either move sideways for a little bit longer or to squat down a little bit more and let things tighten up. That's me. But I do understand what you're looking at. Everybody trades slightly differently. Regardless, this has been the lithium mining. It plays into a lot of different things right now. There's a lot of good volume to the upside. And, the fundamentals ain't that great. But still, I see what you're looking at. For me, this is a pass. But I also, just saying, I understand what you're looking at. ISS. SSC. Why can I not type? What is going on? ISSC. There we go. All right. Arrow systems. Really, really short flag right here. Right. And then this was a nice high volume breakout here. And then reversal of resistance to support. Now we're starting to see. So could this stair step again? 100%. The fundamentals actually look pretty good on this one too. So I think based on what I'm just seeing about the names that you're mentioning, I could see where this is of interest to you. I see the strength. If we even do breakout, let's just say the all-time highs, you got nice tight 10% in here. So just maybe assess your risk, because realistically, you want to be able to give this to this resistance to flip to resistance from resistance to support and this sideways action. So I think you got to be willing to kind of let it chop a little bit, break out, pull back, whatever it may be. But yeah, I see what you're looking at here. So where are we? IB. This is Fensukasa, if I said that correctly. Interactive brokers. This is extended for me. If you own it, beautiful. But this one's extended for me, 100%. Lunar. Intuitive Machines. Right, big base here, but this is extended. This needs some time. Again, if we could get up to this all-time high area and form a base, would love it, but extended. All right, Granite Construction Incorporation. Construction stuff definitely showing some strength. For me, this is extended. I guess if you're somebody who likes to take a position off the 21, possible, but extended. AEM, I believe, is also extended. Yeah, AEM definitely extended. This has just been a name that I botched multiple times. So this one, it's a rough one for me. But yeah, it broke out. It's continuing to trend higher. It's moving really well. This if you're in it, great. If you're not, just you got to be patient for another opportunity. ANET. All right. So this made a really good move, and a lot of these semis did this. Monolithic Power did a very similar thing. Oh no, not Monolithic Power. Oh, I'm drawing a blank. I can't remember the name I'm thinking of. But a lot of these semis, I think maybe it's in this watch list somewhere. Why am I drawing a blank on the name that I was thinking of? Nope. All right, drawing a blank. Oh, there it is. Rhombus did a similar thing, right? Broke out and then kind of pulled right back. So when we're looking at ANET, really big move, starting to pull back again. This I want to be more patient on, but again, that semi area, the communications, this kind of general group of a lot of the stuff that's supplying AI, I'm just keeping an eye on it for setups, but right now I don't really see anything that's worth my while right now. But definitely a name that I'm keeping an eye on. I would wait for SanDisk. There would be plenty of pullbacks, opportunities out there, Brian. 100%, 100%. Like we'll go back to that one quickly, right? This is a high ATR stock. It has been trailing that 5, right? But even if this pulls back to the 10, we're going close to a 10% move. If this pulls back to the 20, which it's still in an uptrend. That's a over 21% move downward. Buying this up here where it could easily be primed for a pullback is just, it's not a good way to manage your risk. So Brian, 100% agree with you on that. Ken, what's going on, Ken? Inab. One of these days, I'm gonna get this right on the order of how I type. Maybe it's the chart. I don't know what I do wrong when I type these things in sometimes. All right. There you have your weekly, forming the base on the weekly. Found support at the 50. Nice 20% pullback. So starting to form this base, staying above that 50, trending higher. Fundamentals on this look good. Institutional sponsorship has kind of flattened out, but overall good. Biotech's, the group itself has been doing very well. So yeah, I think this is one to watch. I could possibly see, because of the inside day and the support right at those moving averages, somebody wanted to take a swing trade off of this. Maybe possibly see this continue to tighten and consolidate, and then break these downtrending lines. Yeah, I can see what you are looking at here. I'm very hesitant on biotechs in general, just because I've just had some trouble trading them, and they can be a little bit more volatile. But the biotech industry has been doing good, and this is possibly setting up. So I can see what you're looking at, and I think this, if it falls within your style of trading, worth a while. Irene, I know I have this one right here, so I don't have to type. Forming that right side, we rallied, broke out of this cup with handle way back here, trended upwards, made a nice big move. Now we've corrected. We spent some time below the 50. We're starting to trend upwards. We're seeing some of the volume come in on here. Things have gotten a little more choppy. More of a high ATR name. Right now we're about 9% off of that 21 EMA. So yeah, I want to let this kind of tighten up, give me a better setup, but another name that's definitely, as you can see, on my watch list to keep an eye on. NXT. I own this one and I sold it. So I had bought breaking out of this kind of range through here. Actually breaking out of the inside day over here. I had put a position on. It had ran up. It had kind of corrected. I was starting to get heavily exposed in the market. The market just starting to get very, very choppy. I basically sold this as the laggard that I had at the time, but solar looking good, working its way to those all-time highs. For me, it's extended right now, and I'm just keeping an eye on it as it's building up the right-hand side of this base for another opportunity to get in. And then obviously for you position traders, you're looking at that all-time high and seeing how we interact there. But yeah, definitely this has been very, very high on my watch list, something that I'm continuing to watch. The big thing, and this was also partially the reason that I had sold, is we have earnings coming up on Monday after close, and I did not have enough of a cushion, nor did I think, given the market environment, I was going to be able to build enough of a cushion to be able to hold this going into earnings, which I look for at least 10% or a very, very small position with a at least above 5 to 10% gain, depending on how much equity risk I have going into earnings. So that's why I'm not in it, but I think this name looks good if you're in it. And you're going into earnings, just make sure you have a good cushion. If you're not in it, understand the last thing you want to do is buy, right before those earnings come out. It's just a gamble, to be completely honest. And let's see what happens at earnings and see how this right-hand side forms out. I know some people, those earning gap ups to all-time highs, they have ways to enter that. And if you do, and you have a way to assess your risk, then by all means. But solar, great group. This definitely one that's been performing fairly well. And like I said, the only reason I got out of it was just because of where I was at, how the market was acting, and the earnings on the horizon. But I see what you're looking at. Ken, I've been hesitant on ANAB because of the sector. I've already forgot ANAB. Oh, biotech. Yeah, absolutely. Understandable. You don't have to, there's biotech's one of those industries a lot of people don't trade. So nothing wrong with that. All right. We went through a lot. I keep talking about risk, right? One of the things that's just very, very important to me. So for those who do know, I created a trading journal. I'll tell you guys some of the updates that have kind of gone on. This is a test portfolio, just so you guys know. I keep saying I'm getting so close to getting this out. I just want to make sure that when this does make its way out to everybody, and I do make this a public release, that it works well and everybody's happy with the product. So been tweaking a lot of stuff, been doing a lot of little bug fixes, beefing up the back end, make sure I have right data providers. A couple changes that have been made. Number one, I've updated the AI coach. This now has built-in AI. So there's no more bring your own AI API thing. I realize for some people that is just too confusing, too much work. I figured out a way to make it work within the price that I'm not going to get killed with AI usage fees from everybody. But yeah, so I've updated this, really designed a specific AI model. It's based on Google Gemini, but it is built with some extra knowledge. And what it's doing too is following your risk rules that you set, your trading strategy, and your trading rules. So the AI model will have access to all this information. So as it's actually assessing all of your data, which is really the big power in this tool, is making sense of a lot of data that normally just sits in a journal. And now you have to manually read through all of these entries, which is just very, very difficult. It's now all built in. There is no bring your own API. The AI model is a lot stronger and a lot better and understanding of trading and your strategy. And then I've kind of designed, there's a couple of quick things you could do. It even, as you could see, Magellan noticed you had 8 consecutive losses recently. Want to review what happened. So some suggestions to help you understand, like, hey, maybe this is something I should ask the AI to look at. But just lots of different ways to look at your information. All different time frames. You can specifically say, I only want you to look at this. And because you have all these selections, it just makes the AI function a lot faster, a lot better. So this is almost all built out. But yeah, this is a big update. Just having it all built in and just really tailoring this. I call it Magellan, going with the Waypoint kind of theme. Yeah, really beefed up this model this week. So I'm hoping this comes out. Like I said, I switched data providers for a more reliable data provider, so that should help a lot too. Cleaned up a lot of the settings, making things a little bit just better. We have added emails. So you're going to get weekly and monthly recaps automatically. Everything's going to be looked at. You'll get a recap of how your week went on every Saturday morning. And on the first of the month, you'll get a monthly recap from your last month and comparing data. So this is something cool that I like that's added that just pops up to your phone and gives you some data. For those who don't know, I've also added some tagging systems. So the big thing for me with my journaling is you got to type a lot of stuff out, right? It takes time. But a lot of times we're looking and tracking a lot of the same stuff. So where everybody can create these custom tags, this is going to allow you to quickly journal. You can create all these custom tags, both for your trade debriefs, which is your post analysis, your journaling, so your personal life journaling. I like to track sleep, work, personal life, and see how that correlates with also my trading mindset, which you can do that right there too. And now when you come in here, you can type, but you don't have to. You can just come in here and say, I slept like crap, had a long day of work, but I'm also feeling extremely confident. And with this gives the AI real consistent metrics to track and to be able to see like, wow, you slept poorly for 3 weeks and you're traded like crap for 3 weeks, and see those correlations. And for the user, it's just making things much easier to quickly enter data. On top of that, with the journaling, I can't do it now because my mic's hooked up to this and it'll cut out the audio here, but there is voice journaling. So you can just talk and it will transcribe everything you're saying for your journaling purposes. And you can see you can track different time frames too. So you can see the consistencies and when you're making decisions and how you're feeling, things like that. You don't have to do this if you want to only do one time frame. I suggest just doing post analysis. And then, like I said, the same thing with your trade debriefs, being able to quickly just track certain things that you want to, maybe you're having an issue with position sizing. Well, now I want to make sure, did I position size right? Did I position size wrong on all my trades? And it'll give me that data to quickly not only log it, but also, again, assess it personally and also use the AI. Yep, trade logs. You got all the data you guys need. And then this is the other big thing. We were talking about risk. This is a test portfolio, so this is not updated at all and accurate. But knowing where your current stops are, knowing exactly how much risk you have, the percentage you are from that stop, if you do get stopped out, what that means for that actual trade. So if this trade was real and the stop was here, it would result in a 5% loss. And then if I was to move this up, you could see, okay, my new stop, if I get stopped out, is a 10% gain on the position. The net risk, your actual trade risk, the weight of the position, portfolio heat. If all my stocks get stopped out, what's the impact to my equity, which I think is very, very important for those that trade on margin. Really understanding the risk you have on margin based on your stops and what that impact is going to have to your portfolio. Looking at leverage, all these different things. Planning out trades, dashboards to really look at all your metrics, equity curve, drawdowns. This is all fully customizable. You could move things around. You could hide stuff. I don't really care about dollar amounts. So if I want to eliminate dollar amounts, I can do just that and get rid of that, move things around. So trying to keep this simple once it's all set up, efficient, where you can quickly document everything. And then using that AI model to make all sense of that. So like I said, I'm hoping to get this out next week. Just working through a couple more things, got a couple of people testing it for me, and I will keep everybody posted. If you are interested in this, there's a Discord channel where I'm sharing all these updates. I don't have it on here. So I have it in the Path to Profit Discord. So join that and just, you could shoot a message, hey, can you share that Waypoint Discord channel so I can see what's going on? And I'm going to offer something very special to a bunch of the first people, like a lifetime subscription. So definitely want to check that out if you're interested. Oh, and in terms of logging, you can log trades manually. Setups, rules, things you did, right? Notes, voice journaling, charts, screenshots, everything you're doing. But then the other big thing is you can import via CSV file. So what I do is on my account that I actually use is the end of a day where I made trades, I go to my broker, I download the CSV, I dump it in here, and then I quickly make a couple quick edits and take some notes. So I'm not sitting there copy, pasting, typing every entry, shares, stock name, all that stuff. And eventually working on getting broker integration into this too, so you don't even have to do that. And it'll just tell you, hey, you have 2 new trades that were entered today. Is there any notes or updates you want to make to those before, for the day's trades? All right. LTD. I'm not sure what's LTD, Ken. Other than that, what else? I know a couple more message came in here. Let's see. I think it's also interesting for next week how the markets could react if the U.S. attacks the Iranian regime. Anton, look, we'll jump out of here. I'll be honest, to me, like a lot of the news stuff, like it's just always something, right? It's, oh, Ukraine, oh, Russia, oh, Venezuela, oh, Japan's doing this doing that. There's just so many factors out there, like it's hard to really understand all of those, and it's more often the market's reaction to the news than it is the news itself. So I don't worry too much about that. Oh, lifetime deal, Ken. Yeah. So look, this is a brand new platform. Part of, for me to continue to put things like broker integration, beef up the AI, add more features, make things more robust. Obviously, there's a cost to doing all that. So my way to kind of pay it back to the people that are going to be some of the first users is just having lifetime access to it. And by signing up and kind of saying like, I'm in for this, and I want to see what this becomes. It's going to be like a one-time thing, and you'll have lifetime access. And then eventually, after the first kind of group of people signs up, that'll turn off, and then it'll be annually and monthly, just like any other application. But yeah, a way for people that are interested right off the bat to benefit, and a way for me to help grow this thing and make it an application that is hopefully going to be big and have every little feature that everybody wants, and be quick, easy, and efficient. To what I think is one of the biggest pain points I've had trading is journaling and debriefing and all that stuff. It's just, it takes a lot of book work. And if you can have something that's doing it for you on top of taking an AI that can make sense of it, because that's the other thing. I've journaled before. I've wrote how I felt every single day, how I feel about every trade, how I feel about the market. But the problem is now, if I have 200 something journal entries, for me to now make sense of this, and I've tried it before, I'm sitting here like highlighting, okay, today was a FOMO day, one this day, one that day. And I'm like trying to tag things and create things myself, so that now I could say, okay, this is what my like mindset was like. This is how my trade, and it just takes a crazy amount of time. And a lot of people just don't even do it because of how much time it takes. And then there's user error too, because you can go in there and you could mislabel stuff or misanalyze or skip over things that were going on, where the AI is going to be a lot better at that by just simply tracking what's going on and correlating it to your trading. So that's really been a lot of the inspiration behind me to do something like this. Will your platform also show list of near pivots, recent breakouts like market search? No. Okay. So this is, glad you asked that, Banana Kid. This is not a screening platform. This is not a charting platform. This is not, this is like, if you're comparing this to Deepvue and market search, this is something totally different, right? I do not want to dabble in that. That is just the fundamental data, all that stuff. Like Deepvue crushes it. They do a good job. People use market surge, right? they do, those things are done and they're done well. And I don't see a need to improve that. So I'm not going to incorporate that into it. And it's just a whole nother can of worms that I'd be trying to do. And I'll be honest, I'm not going to be able to do it at the way that they do it. And I'm happy with the tool. So if it ain't broke, don't fix it. The gap that this is filling is that post analysis. And what I've found is the majority of people are doing this through a, oh, my bad, dude. But the majority of people are doing this through an Excel sheet or pen and paper. That's what I see people doing. And there's just a lot of work. Just designing the Excel sheet, if you're not finding a template, is one thing. Making all the calculations, making everything. And then even if you get a robust, really, really good Excel sheet, and I've done this before, I still now have to manually, every time I put a trade, I'm typing everything in. I'm still manually analyzing everything. And even with the Excel sheet, like, again, tracking the mindset and the market outlook and all those things and correlating all that data is just, it's just a crazy, crazy workload. And like I said, I've been trading now over 8 years, and it's just been something that's frustrated me a lot. I know I'm leaving a lot of information on the table, but with today's day and age of AI, I just think it's how do we not utilize this to make ourselves better traders? And that's been the inspiration behind this. So that was a good question. I'm glad you asked so I can clarify. All right. One more. All right. I can't leave somebody hanging. This is the last one we're doing, because I see we want to look at, and then I got to go. MPWR. Monolithic power. We looked at this quickly. I just kind of glazed over it. This is high on my watch list. The big thing here, right? Semiconductor area. This is showing strength. We're building that right-hand side. I don't like the low volume, but there was some perks in volume here. Not the biggest concern. Watching how we're going to interact with these all-time highs. Extended now for an early entry, but looking at how we interact on those all-time highs, hoping for some way that things can tighten up, pull back, and give me a better risk. Kind of, as you've seen a lot of the names, that's kind of what I've been saying. So there you go. All right. That's all we got. I appreciate everybody. I know these episodes have been much, much longer than they normally are because of just the amount of stocks and everything you guys are going over. And I rather that than this just be me and be a quick show. So hopefully you guys appreciate it. And hopefully with the length still has the value that you guys are looking for. There's the YouTube channel, the X profile, the link in the description for the Discord channel and everything. Again, Waypoint, either reach out to me personally or join the Pets Profit Discord, and then I'll send you the Waypoint Discord. The reason I have that separate is I understand there's like the Pets Profit Discord is a lot of your swing position traders. And I know eventually there's going to be a point where there's going to be other styles of traders using Waypoint. I don't want those people mudding up the great community that we have in the Path to Profit Discord. So that's the reason why those are separate. Anytime, Ken. Max, sorry, joined late. Which one do you think is the best run? Sure. I can't leave anybody hanging, man. You're spending your time getting on here. I gotta answer everything. All right. Run. I'm going to do this one quick. Run. Shoals. Canadian Solar. All right. Canadian Solar to me is still in the downtrend. So that's out for me. It does look like it's starting to make its way up the right-hand side, but overall still in the downtrend. So really now it's becoming between this and that. To be honest, look, the fundamental side of things, looking quickly, just tapping back and forth. I mean, they both look good. The patterns are both making their way up the right-hand side. To be honest, I don't know. And nobody really knows which one's going to be the leader, or they might just both trend higher. I think both of them are worth watching, and then you just got to kind of compare them. If you're a fundamental guy, look at the fundamentals and dig and see which one has better fundamentals. If you're a pure technical person, dig through and look through stuff. Like, again, go through and see, okay, this has this better. This is better here. This has a tighter entry. This is trending better. This is better ATR. This is like, play it into your your strategy and your specifics and what you're looking for. And sometimes you're going to have times where you don't know what to go with. And I've had that happen where I'm just buying the first breakout. Sometimes it's right, sometimes it's wrong, but I don't forget about the other one. Sometimes it's I buy a little bit of both, and whatever one works, great. The other one doesn't, I sell it. Or if they both work, I'm in both. So, way to go about it. All right. Really, now we're done. I'm not even going to look at the chat. So, I appreciate everybody. This is always fun. Another great week. Looking forward to talking to everybody in Discord throughout the week. And again, hope this provides value. If you've made it to this far and you're not subscribed, just subscribe, comment on the actual YouTube video, like the YouTube video. All that's going to do is keep pushing this out to people, letting the YouTube algorithm gods know that certain people like this video, and exposing to people who would be interested. So, and then last thing I'll say, there was somebody that reached out to me in Discord that was like, hey, well, like, can you open up donations? I love what you're doing. Love to support the cause. Dude, that if you're in here, that was huge. That made me feel so good, but I'm not doing this for donations or for like, hey, buy me a cup of coffee type of thing. Like, I do this because it helps me. Helps me a lot. I do this because it helps the community. And if you really do want to support, then I want you to also get something in return for it. And really, Waypoint right now is kind of the one things I think that I'm working on, that I'm hoping people are paying for and getting something in return for it. And this stuff is just, I hope everybody gets a good community out of it. I hope people learn to trade, and just everybody just pays it forwards and helps somebody else out there. So yeah, that was huge though. I appreciate that. So if you're in here, thank you very much. That meant a lot, just to hear somebody being even willing to just straight up donate for what I'm doing for free anyway. So yeah, that's all I got. Enjoy the rest of your weekends. If you're in one of these areas where we're getting bombed with snow, stay safe, be prepared, and just as the market, stay safe, know your risk, and be prepared. Know what you're doing going into next week.